of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, we'll have full coverage of TikTok, from what we can expect in the Senate, who wants to buy it, and the response from China, and of course the impact on those content creators. We've got you covered.
Plus, Starship goes further and faster, but SpaceX loses the vessel during re-entry, an unprecedented technology breakthrough for Musk's company. Details to come.
And we get a check-in on the tech earnings, sit down with the CFO of UiPath and push ahead to Adobe's results after the bell.
Rumble is one of the names to the downside, the sort of more conservative social platform backed by Peter Thiel. But as you know, Caro, it's been absolutely soaring in recent days after its CEO said, hey, we could talk with TikTok about a cloud partnership, about looking at TikTok's US operations. There's no hard catalyst today, but it's interesting to look at different moves. And if anything, some of the names that saw significant gains in more recent days have kind of pulled back a little bit, because I think we still have quite a lot to work out when it comes to TikTok.
Indeed, and we've got a lot to dissect in terms of the reactions coming from the business itself, from key diplomats as well, just following the House passing that divest or ban TikTok bill, Ed. Well, the top American diplomat in China hit out at Beijing's objection to a potential ban on the social media platform in the US. Just take a listen to the comments coming from the US ambassador to China.
We've heard a number of complaints from the government here in Beijing this week about the American debate on TikTok. I find it supremely ironic, because government officials here are using the X platform to criticize the United States. They don't give their own citizens the right to use X, to use Instagram, to use Facebook, to have access to Google. And so it is ironic indeed that the government here is complaining about a process when they shut down access for 1.4 billion Chinese to all of these platforms.
Meanwhile, we've got to get up to speed with what's happening here in the US. Dan Flatley has more, following the story, of course, closely. And the key question now is, does the startling numbers of support in the House really carry over to what we might see in the Senate?
Yeah, I mean, I think that's the question of the day. You know, the Senate is known for working certainly more slowly than the House, and I think that you're going to have a variety of opinions over there. There's 100 senators, and they're each going to have their opinion, as Mike Gallagher, who is the author of the House bill, said yesterday. So there's a few different paths forward, one that could go very quickly and a couple that would take a little bit longer. It's looking likely that they'll take sort of the longer, more deliberative path. And if that happens, it's kind of a question of, does the interest stay there? Where are we 2 or 3 weeks from now? What's happening in the world? Is this still top of mind for people? So, you know, it's still a lot of tape to play out in terms of that.
Dan, is there a clear party line on this bill, like a Republican attitude towards it and a Democrat attitude towards it, that we can carry through to the Senate? Or has there been basically a bipartisan approach to this?
Yeah, I think there's no real clear party line. I mean, it's very similar to the National Defense Authorization Act, the big defense bill that passes almost every year, or does pass every year without fail here, where you have a lot of the sort of more moderate Democrats, a lot of the sort of hawkish Republicans, which is really the majority of both chambers when you get down to it, supporting it, passing those types of bills. And then you have the progressives and the more libertarians or conservatives who are against it, which is a smaller number. If you just look at the House vote, I mean, 352 to 65 really kind of tells you where you are in the House. In the Senate, I've heard numbers like 70 of the 100 senators would support this, so that gives you a sense of where we are there.
I think it's worth reminding that we're seeing a pushback more broadly of the US government having foreign ownership of key companies, or indeed access to its own population. We just have to see what's happening with US Steel and Nippon Steel as well. With your expertise when it comes to national security, Dan, will this be the focus of lawmakers, that this is a national security concern, or are they actually going to go more towards, well, who does this ultimately make more powerful? US technology companies?
Well, you certainly hear some concern about that, especially along antitrust grounds, like who would buy this? Would it be a Meta? Would it be somebody else? Would there be challenges to that? And you also hear questions about, is this the right thing to do? Does this really meet the moment? Does it address the national security concerns while preserving the ability of folks to continue to exercise their First Amendment rights and their right to free speech? The bill's authors say that this is not a ban. It's designed to force ByteDance to divest TikTok, but when you talk about a 6-month timeline to implement a divestment, that's where you get some people who are a little nervous that may not be enough time to actually pull together a sale, and that would, in the end, lead to a ban. So, that all remains to be seen.
Bloomberg's Dan Flatley, it's been a busy 24 hours or so for you out in Washington, D.C. Thank you. Let's keep going with the TikTok story and talk more about the implications of what is a divest or ban bill and the potential antitrust issues around that. Let's bring in an academic studying the intersection of emerging technology and the law, Jennifer Huddleston, a technology policy research fellow at the Cato Institute. Simple question. Would the United States let a large technology company based in this country buy TikTok's US operations if they choose to divest?
It's an interesting question. This whole issue is coming up at a time where technology acquisitions have been under increasing scrutiny, and particularly in the social media market. When we look at popular social media apps like Facebook, some have really asked questions about concentration. Here you have what has become an immensely popular app providing yet another option for short-term video that users have chosen because they feel like it's the right platform for their choices when it comes to expression. If we did get to the point where it was sell or ban, you have the question of would the companies looking to buy it face further antitrust scrutiny, particularly from the Federal Trade Commission, around a potential acquisition of TikTok? Or in the alternative, if it were to get to a ban point, what does that do for the overall social media market?
Jennifer, 24 hours ago, FCC Commissioner Carr joined Bloomberg Television, and he gave his opinion that it doesn't have to be a U.S. company that buys TikTok's U.S. operations. It could be from another country, so long as it's not China. Is that a feasible thing to your mind?
There are very specific requirements around the divestment that they have to assuage concerns about certain foreign adversaries being linked to the company in question. So that would depend on how the administration looked at something like that and whether or not they felt that that was necessary or that that sufficiently met the concerns, as well as the question, again, of when we look at, particularly if we're considering another technology company that might have the expertise to continue the popular TikTok product as it is, are there really companies in areas like Europe that have that expertise right now?
I'm going to go really basic, Jennifer, for a moment. Is it a good idea to separate it from its China's ownership, from your perspective?
There have been a lot of questions raised about potential national security concerns and a lot of different questions around national security that have been brought up. Some are concerned about the potential access to data, and there may be one set of restrictions that could resolve that, as well as concerns about if the data practices change, do you still have problems with the ability to buy that same data on Americans from data brokers? The other issue that's been brought up often is questions about the algorithm, and that really starts to get into questions of speech, not only from the point of view of what could this mean for government, the U.S. government getting into the speech of social media platforms more generally, but also what does this mean for the broader speech context when it comes to traditions around the First Amendment and Americans' ability to access speech.
And this has been done in India, but before it was nearly as successful as it currently see TikTok being successful here in the US. How technically do we do this?
I think that's a really important question because it also goes to who does the onus for enforcing this ban, for ensuring compliance with what could be a ban, actually fall on. The bill in question focuses on the distribution, maintenance, and updating of covered apps or websites. So when you think about that, what that actually may mean is that it falls to places like app stores or web hosts to ensure that these products are removed. Many of those companies are American companies. So again, we have questions of what impact would such a piece of legislation have on Americans and American companies.
almost feels like there's more questions than answers, but thank you for answering ours today. Cato Institute Technology Policy Research Fellow, Jennifer Huddleston. Meanwhile, coming up, we've got to get back to space. SpaceX launches its Starship rocket to near orbit in space. We've got all the details. Ed, you're fresh on the back of reporting on that, but what else are you looking at?
Yeah, back down here on Earth. I'm taking a look at Adobe. So the stock's up 0.2%, reporting after hours. They're on track for their third straight quarter of double-digit sales growth. Boring. But the story is about Firefly AI. You look at like all of the startups working on a text-to-image platform and a text-to-video. Has Adobe got some response to that? That's what the street's worried about. The world of AI. This is Bloomberg Technology. There it is, SpaceX launching its colossal Starship rocket and system in its third major test flight. The spacecraft lifted off earlier this morning from the company's launch site in Boca Chica, Texas. Simply put, the story is that Starship went further and it went faster and it pushed the boundaries of space launch systems and technology. But it was lost later while returning to Earth. Let's go out to Texas, to Bloomberg's space correspondent, Lauren Grush. Explain what has happened this morning with SpaceX's Starship.
Right. Well, I think you just said it there earlier, Ed. They got even farther than they ever have before. It's very clear that SpaceX is making progress when it comes to the development of Starship. This flight lasted about an hour, which was kind of the planned flight time. Earlier flights lasted just a few minutes before the vehicle exploded. No explosions this time, and they achieved a number of amazing feats that they haven't before. They were able to reach near orbit, reach space, nearly lap the Earth. Unfortunately, the vehicle did seem to burn up or be lost during re-entry into Earth's atmosphere, but they got even farther than they'd ever planned or ever expected before.
So let's show images of the re-entry, and there's an important technology point here, which is that SpaceX was able to maintain the camera images that you're seeing now because it had Starlink on board. And as it went from an altitude of, say, 100 kilometers downwards, it was bouncing the signal off so many Starlink satellites in orbit, Lauren, to maintain that kind of high-fidelity connection. This is what I want to put the question to you, though. To quote one of the preeminent space minds, Buzz Lightyear, is that flying, or is it just falling with style?
Well, the way that they set up this flight is it was always going to come down no matter what. It never was intended to reach a full orbit. It was always going to be suborbitable, so gravity was always going to bring it down at some point. What they were hoping to see is if they could bring it back to Earth intact, and so they were kind of hoping that it would stay in one piece and splash down in the Indian Ocean. It looks like that did not happen. They'd lost signal from all of their different inputs at the same time, which indicates it probably burned up, probably was destroyed in some way. So yes, it was falling with style, but that was always the plan. But it did fly before that happened.
Ed Ludlow and his 6 espresso shots to the rescue, as he might have said too. I'm interested, Lauren. Ultimately, like, we are potentially going to Mars. We are already with a NASA contract to go to the moon. Where does this put SpaceX?
Right. So with each of these flights, they learn a little bit more than last time. So I would say they're incrementally farther along than they were before. I mean, reaching near orbit was a huge achievement. They're going to need to be able to do that if they want to launch satellites from the vehicle. But there's still quite a long laundry list of things that they need to achieve in order for this vehicle to be a deep space vehicle. For instance, they need to demonstrate transferring super cold propellants between the tanks in the vehicle. They did have that demonstration on this flight. They were trying to see if they could transfer those propellants while in space. We aren't sure how that went, but they seem to have conducted the experiment, so we'll be eager to learn about how that went. And then they also have to come up with life support systems, demonstrate that it can land on other worlds like the moon. You know, there's a long way to go, but this does give some confidence that they are moving in the right direction.
Lauren Grush, busy morning. We appreciate it so much. You two are a dream team with all the quotes.
Okay, it's time for Talking Tech, and in the news, SoftBank is weighing a potential investment in one of Europe's hottest AI companies, Mistral. The Japanese tech giant has expressed interest in backing the French artificial intelligence startup the next time that it raises funds, according to sources. Any deal could potentially value Mistral at more than $2 billion US. Plus, fintech giant Klarna will begin allowing users in the UK to make payments directly from their bank accounts in an effort to reduce its reliance on both Visa and MasterCard. Initially, the move will help Klarna cut costs, and longer term, the product will help it create a stronger alternative to the payment giant's networks. And finally, Amazon has pledged to make fixes to its advertising operation after mistakenly charging online merchants to promote products shoppers actually couldn't purchase. The problem came to light when a seller discovered he was being charged thousands of dollars to advertise merchandise in California, even though he'd stopped selling those products there. After Bloomberg described the small business owner's experience, the company acknowledged that he and other sellers paid for misdirected advertisements, and it was working to fix the problem. Caroline.
Let's go to a key name to be watching today. Shares of automation software company UiPath. They're actually trading a bit lower. That's after its first quarter revenue outlook seemed to come a little bit short of some expectations on the street. But that said, the company reported fourth quarter results that really beat those expectations, and it's received several analyst upgrades on the back of the results. So let's dig into where we're likely to see some transparency going forward with none other than the CFO of UiPath, Ashim Gupta. It's great to have you here, Ashim. Thank you for joining.
Thanks for having me, Caroline.
So let's just first of all tackle some of the forecast. And a dip in net retention rates, softer subscription sales is what Bloomberg Intelligence calls out. JP Morgan saying, look, maybe there's some macro pressures here that still need to be reworked, repositioning. When can we get clarity on how that macro pressure is going?
Yeah, look, I think we've talked about the macro environment being relatively stable in the sense that it continues to be variable. We have different pockets that have strength. Our enterprise business is incredibly strong. If you look at our customers growing greater than $1 million, they're up 31% in the fourth quarter. And we look at that as a real sign of strength in terms of enterprise spending. That said, the lower end of the market, that's where we see volatility. And so overall, we look at a very positive environment for AI and automation and the transformative effects of our platform. That's why we actually raised total year estimates for the coming year by close to $30 million.
Well, let's talk about convincing that lower end of the market that this is the right investment at the right time despite those macro pressures. I mean, JP Morgan seeing meaningful reacceleration ARR growth, and I'm sure it's because of the AI promise and realization. What are you doing differently in your automation software?
Yeah, I think multiple things. One is we've had several great product releases that are out there. If you look at the AI trends that have been there, we've been actually investing for the last 5 years. So things like Autopilot, which enables natural language to allow developers to create automations faster. That's being released. That's going to go into production and being priced in the summertime for us. When you look at areas like intelligent document processing, this isn't just seeing a document. This is processing, understanding and processing the billions of documents that exist in governments and enterprises. That is meaningfully scaling now with our customers. So when we look at those trends, when we look at the C-level conversations that we're having, they're no longer talking about digital transformation, they're talking about AI transformation.
Right.
They need business automation platforms, and that's where we come in, and that's where we're valued.
Well, Ashim, the last 18 months has been about a romantic discussion around generative AI, in particular direct-to-consumer focused chatbots. But a lot of people I speak to are now just coming to the honest reflection that where AI is most present and useful is in automation. You do large-scale end-to-end. But I wonder if you kind of feel like you got left behind in all of the chat around AI, when it's actually the tools you're working on that everyone's now saying, oh, that's actually quite useful.
No, actually, it's the opposite from my perspective. To be candid with you, if you go back to February of last year, there was discussions that said, hey, is UiPath, is it really an AI company? You fast forward, through last year, we had thousands of customers, tens of thousands really looking and understanding us, C-level executives attending our AI summit. And when you look at analyst notes today, I think one of the analysts even say that UiPath is AI that works. So the romantic notions of AI are great. We're excited about the macro trends. We're investing not just for the next year, but what's possible over the next 10 years. But it's practical today. And so when you look at our revenue, AI and the areas that our platform can drive growth, that is already taking root. It is practical right now.
It's certainly been the bet of Cathie Wood on some other names in the AI space. UiPath, key one of them. CFO Ashim Gupta, great to have some time with you post your earnings.
Hi everyone, it's Show here. Just wanted to share some thoughts with our US users about the disappointing vote in the House of Representatives. There has been a lot of misinformation, and I hope to clarify some things. First, thank you to our incredible community. You are what makes TikTok so special. Thank you for making your voices heard. Over the last few years, we have invested to keep your data safe and our platform free from outside manipulation. We have committed that we will continue to do so.
No snazzy dance routine, but the TikTok CEO Shou Chew reacting to the, quote, disappointing House vote. Look, let's bring in Bloomberg Opinion's US tech columnist Dave Lee, who's about to do a dance. No, it's not, but it's actually just going to tell us a little bit more about... Your point of view is a really interesting one. You took to Bloomberg Opinion before actually the House had voted it through, but looked likely it was going to, saying, don't take this to the last moment from a legal battle, TikTok. Actually just sell and sell now. Why?
Well, I think if this is going to be an inevitability, which some people feel it is, then the maximum value they're going to get from the sale of TikTok would be as soon as possible, right? I was at the South by Southwest Festival in Austin this week, which is a hub for creators and social media figures to come together and discuss the industry. And already people are starting to say, well, is this a good place to build my following anymore? Because it may not be here in, by the end of the year. And so there is a danger that if the sale takes too long, the value of the app might have diminished and they won't get as much money as they could have done. However, interestingly, since writing that column, some of the fallout we've seen from the users, you do wonder what exactly a buyer might be getting, because you heard there from the CEO of TikTok, him saying, the user base is what makes the site what it is. That's kind of true, right? And if there's a feeling that people don't like the new owners, or they think that this has been done incorrectly, then the value of the app could go down as well. So it's a really, really quite tense situation.
I'm just trying to do the math. I think you're right. Like, what is it you're buying? The last reported valuation of ByteDance, the parent company, was $268 billion, right? And that makes it by some distance the world's most valuable private company. There are 170 million US TikTok users. There are about 1 billion around the world. How do you find a dollar value and then price in all of the shenanigans that is happening this week?
Precisely, and also it's interesting to think about what exactly is for sale, because technically this bill would only require the US user base to be part of this divestiture if it wants to operate in the US. That doesn't speak to the rest of the global community. It's got a big presence in Brazil, it's obviously got a big presence in Europe, and so would that be a separate company, and would that be obviously less valuable if it was separated from the US? I also think we need to think about the value of the algorithm and the technology that's behind TikTok. Of course, the reason why it exploded in popularity, as you know, Ed, is its algorithm knows what you like and it shows you more of it, and that's how it's grown. Now, it seems like if this sale was to go ahead, China would still try to retain the secret sauce, the thing that makes TikTok as popular as it is. And without that secret sauce, what are you getting? You might be getting something that's not worth very much at all, frankly.
Just real quick, yesterday after the vote, I got leaked a memo that Mike Dabbs, who's on the public policy team at TikTok, sent to all staff. And it didn't say much other than they still think that Project Texas, the idea of housing US user data in US domestic data centers currently run by Oracle, is going to convince people that it's fine. But that then leads me to believe, well, who might buy TikTok's US operations, or who might come to the rescue to operationalize whatever the solution is?
I guess one of the striking things about this particular moment in time is, some of the companies that might have the funds and the know-how to buy and own a company like TikTok, they may not be in a position to do that. I mean, it certainly couldn't be bought by Meta for antitrust concerns. You'd question whether someone like Microsoft, who was part of that discussion when all of this was beginning a couple of years ago, it doesn't seem like we're in the climate where a big tech company could take it over. But it could be a coalition of other buyers. We saw Steve Mnuchin, the former Treasury Secretary, today talking about how he'd gained, he was seeking to form a group of investors to buy the app. But I wonder, if that is the kind of deal that ends up happening, what will these TikTok users think of that? Because, of course, as a former Trump administration official, I mean, that's going to be seen as particularly disagreeable, I think, by a large number of those TikTok users. So it's finding the right buyer is going to be incredibly difficult, I think.
Here with the opinions, we thank him, US tech economist Dave Lee. Meanwhile, we were just talking about what creators are going to think, what consumers are going to think. Let's get that creator perspective for you on potential separation, even a ban. Amber Vensbox is with us, president and co-founder of LTK. It's one of the world's largest contextual shopping apps. And basically, your clients are indeed, you work with the creators, no matter where they happen to be and where their following is, to enable shopping and wear what they wear and see what they post. What do your content creators think of potentially having to pull back on TikTok?
This industry was created around 2011 when we launched, so we're now 14 years in-ish. And what we've seen is that history tells us these creators have a transferable skill set. We've seen almost a new platform emerge every 2 years, and these creators have both been able to expand their audiences on these new platforms. New creators have been born. This really just reinforces the importance of having a home base for creators because we know that these platforms come and go. For us, we built the LTK app for them to have a place where they can collect community across all different media platforms and be able to service them in the way that a hospitality business would over the years, regardless of which platform is really in vogue at the moment.
Amber, have any of the creators you talk to, work with, and you're a creator yourself in many ways, have they spontaneously exited TikTok, preemptive of any of these concerns? I mean, for example, Tyler Ninja Blevins, he's a Fortnite streamer, 24 million subscribers across other platforms, did pull back, for example, from TikTok originally.
Certainly, these creators are hyper aware. This is not something that is just a side gig for a lot of our creators. It's actually a full-time business and even a family and a generational business. And so they stay aware of what's happening, even from a policy perspective. And we're now anniversarying a year since TikTok was last, speaking to government. And we saw that our creators started to understand, those that were single platforms started to really move their audiences into a safe place. But we have to remember, with all of these platforms, sometimes there's an evolution and sometimes there's a revolution. But ultimately, these platforms don't have long-term staying power. Creators migrate and they migrate their audiences. And again, these creators have such a transferable skill set that, I know that they are preparing themselves for the furtherance and future proof of their business.
Amber, I find that such an interesting point of view. But creators are now finding careers as creators, right? It is their business. And you're basically arguing that, well, if TikTok goes away, they'll just transfer their skills to another platform. Instagram and Reels in particular is quite similar to TikTok. But do you have any sense of where they're making the most money, right? If TikTok is a complete cash cow for some of these creators, that I imagine they'd be a bit worried about having to transfer their energies elsewhere.
Well, I think that's, sort of a piece of the misinformation here is that creators actually aren't largely paid by these platforms. And so, YouTube is certainly one of the greatest payers. But when you look on down, the business models are such that they're actually taking 100% margin on ad revenue. So as a creator, you actually have to find and build your own business, whether that's through partnerships or whether that's through a commission on sales, like what LTK offers. We actually offer both of those things. And so these creators aren't losing a direct line of revenue from the platform. We have to look at who's paying the bills here. So the brands are the ones that are investing in creator and influencer marketing. With LTK, they've invested over $2.7 billion to date. Goldman expects that to triple over the next 3 years. This is an industry that is driven by consumer demand, and consumers want to be entertained for free on the internet. We see that adults on average are spending about an hour a day on TikTok. I believe there's going to be a lift and shift if TikTok is in fact banned. But we have to go back to what Dave was saying in your earlier conversations, which is what we're talking about right now in government is actually a divestiture. So this is much more like what we saw with Hinge in 2020, and Hinge users, continued on. And so I actually expect that, that TikTok users, whether you're a brand, a creator, a consumer, will continue to have access to this platform for a while.
Amber, thank you for the explanation on how the business model works. I think our audience will find that very interesting on the creator economy side. And you're right, it's a divest or ban bill. What are you hearing about how people feel about one big tech company buying the TikTok assets? And what are you hearing about the other platforms trying to steal some creator content, right? Like saying, just leave TikTok, come to us.
Right. You know, it's become very competitive in the space for media platforms, and they all are trying to attract creators because ultimately we're the ones creating all the content that these consumers see. When you look at these platforms, there are various, types of pipes, I would say. But unless the creator shows up and entertain an audience, there's nothing for them to do there. So we've seen these platforms become more and more competitive. When you talk about who would purchase this platform, certainly in the current regulatory environment, it would have to be a unique player. And I could actually see it being kind of a confluence of players coming together that maybe were even nameless, faceless, and pulling this platform forward. And I think that would be healthy for the ecosystem, for there to be a continued kind of, a difference in kind of who holds the power in this space. On the creator and the brand side. So even since last March, when these hearings first started, the creator industry has come such a long way. So when this industry started, our brands were looking at platform by platform. Today, they're actually logging into platforms like LTK 360, where they're getting full funnel campaign information, cross-platform, cross-media, and they're able to understand what they're doing with that one specific creator, whether that's on TikTok, Instagram, YouTube, LTK. And so they're making decisions actually at the industry level now and not specifically at the platform level. And tools like AI are making platforms like LTK 360 possible, which is really removing any sort of subjectivity that used to exist in this industry. And it's helping our marketers to actually find more efficiencies in creator marketing. And I think that's why you see Goldman, Citi being so bullish about this industry.
Amber Bensbox, really great to get your expertise across a wealth of areas. President, co-founder of LTK, thank you.
Unstructured raised a $40 million Series B to make enterprise data LLM ready. The round was led by Menlo Ventures with participation from Databricks Ventures, IBM Ventures, and NVIDIA's venture arm, and others. Let's bring in the lead investor on this round, Menlo Ventures partner Tim Tully, on today's VC Spotlight. I want to talk about data ingestion and pre-processing because we haven't talked for quite a while about the data that goes into building a large language model, but I first want to talk about the others in the round. What should we conclude from the fact that Databricks and NVIDIA put their own venture money into this round as well?
I mean, I think it should tell you how important it is to have clean data before it goes into training things like language models. I would say that it's not just the language model preparation that unstructured is powering, it's actually some of the more powerful generative AI applications themselves. So when you look at things like legal tech, fintech applications that are leveraging things like Anthropic and OpenAI, they don't just use Anthropic and OpenAI, they're actually using a lot of unstructured data to sort of merge them together and do something more powerful together. And that's really the power of unstructured. It cleans and prepares unstructured data so that it can go into these generative AI applications.
We're moving from a world where large language models have many hundreds of billions of parameters to many more large language models with fewer parameters, right? This is a $40 million Series B. Some of the Series Bs I've seen for the actual LLM builders are just astronomical. Why is this a lower amount? Why is there not such, I guess, hype reflected in the size of the round?
Because it's not a language model itself. It's more about the data pipeline and the preparation of the data. If it were a language model itself, you might see this sort of more of an extreme multiplier, if you will. But because it's more of an ETL preparation pipeline system, that's why you're not seeing that sort of insane multiplication.
When we're seeing insane appetite to be backing some of these companies, not just coming from your normal, typical venture capital, but from corporate VC, how competitive is it getting in the space for you, Tim?
It's getting quite competitive. Every VC in the area wants to be involved in artificial intelligence investments right now, and so it's getting competitive. I would say the corporate VCs are quite additive. They're helpful. They add a lot of value to these rounds, and we're excited to have them participate.
When I'm looking at an IBM, a Databricks, or indeed an NVIDIA, of course, these are US companies. Are you, at the moment, with the context with which we're currently seeing technology, when we've got an administration or indeed Congress people taking issue with foreign ownership of really important companies here in the United States or avenues to target consumers in the US, does it give you pause of getting involved with VCs that don't come from the United States?
It definitely gives you pause and makes you stop and think, but we're really excited about the participation from NVIDIA and IBM and Databricks.
I'm really interested more broadly in some of the AI bets you have already been making then. When you're looking at a Pinecone, when you're looking at ultimately this stuff being used, how are we seeing it turn from hype into reality?
There's a lot of value being created right now. You're seeing a lot of companies that use companies like Anthropic, like Pinecone, some of our other investments generating a lot of cash. A lot of software is being bought. You're obviously seeing a lot of popular apps being generated right now. And so a lot of our focus is on building or investing in infrastructure companies that power those applications. We're really excited about what's happening.
Tim, you'll understand that there is a just microscopic focus at the moment of the TikTok situation, but what I want to talk about is what's happening in Silicon Valley vis-a-vis Chinese technology companies and American technology companies. You know, in AI in particular, there are many vocal advocates who say there's a lot of talent in China, but also at an academic level, we're all kind of working on the same thing. How are you wading through that as a firm right now?
Yeah, we're just being very careful about what we invest in. I focus primarily on infrastructure investments, and so when I think about some of that software being built overseas, I tend to think about how it'll be sold here. Like if there's a ton of engineers building applications overseas in countries like China, I worry a lot about what countries here in the U.S. will buy, and so it gives me a great pause and sort of slows me down in terms of thinking about investing overseas.
So it sounds like you're taking a slower idea and certainly more pause when it comes to investing in foreign companies, but also alongside foreign investors. Where then do you think this ultimately takes us in terms of the US prowess right now? Do you think AI is streets ahead here in the United States compared to the rest of the world?
I think the U.S. is ahead in terms of what's happening. You look at companies like OpenAI and Anthropic, they're based here in the U.S. I'm really excited about what we're doing. We're investors in Anthropic, and they've released 3 models just in the last couple of weeks that are probably, right up there with OpenAI in terms of capability sets. So we're excited about what's happening.
And you're putting your money where your mouth is. Tim Turley, thanks for coming on and talking all about the latest round and indeed where else you're putting the money to work. Menlo Ventures, he joins the board, of course, of Unstructured. Paramount, well, it's agreed to sell its 13% stake in its Indian TV business, Viacom18, to its partner over there, Reliance Industries. What it earns? $517 million. Here to tell us why and what else is going on in India as well is Bloomberg's Chris Palmieri. And just from the Paramount perspective here, is this all about getting more core, getting rid of non-core assets at the moment?
Yes, exactly that. I mean, we're seeing this huge shakeup in the Indian media business right now, $8.5 billion combination of Reliance and Disney's business there. That includes this Viacom18 company that Paramount owned. 13% of that stake was going to shrink. So they were becoming a much smaller investor, and at a time when, as you mentioned, they've been trying to reduce their debt load. They still have $15 billion in debt. They've sold off real estate, sold off Simon & Schuster book publishing. They talked about some channel sales. So this sort of all, merged together at the opportune time for Paramount.
Chris, is this a story about the landscape in India, or is this a story about Paramount trying to work out what on earth to do with itself?
I think it's a story about the media landscape all over the world, and I think it's a window on what we're probably going to see this year in the U.S. Paramount and Comcast have been in talks about merging Peacock and Paramount Plus, for example. I think we'll see a lot of consolidation similar to what India is already going through here.
I just want to go back to Byron Allen as well. What happened with that?
Doesn't seem to be getting a lot of traction from the Paramount folks. Right now, they're still doing due diligence, is what they've called it, is with David Ellison and his offer to buy out the Redstones and merge Skydance. That's been the main focus. Apollo made an offer for Paramount Pictures alone. And so that's not particularly being well received by the Paramount folks, who would like to keep the content portion of the company together and either, find a way out to the Redstones and focus on content and sort of alleviating the losses in the streaming business. That seems to be the major focus right now.
Well, we keep our major focus on all things to do with these content creation companies. Chris Palmieri, thank you so much for bringing us the latest on Paramount and the exit from India. Meanwhile, I mean, we have been front and center content creation in all its guises today, whether we're watching rockets via X. And how many people tuned into that, Ed?
Well, on X, more than 3 million, which I thought we should have discussed, actually. That's astonishing. Next week, we can talk about it.
Well, apparently they're video first over there, too. So everyone wants in. Meanwhile, of course, we don't seemingly want the Chinese to be owning it, according to US politicians. Meanwhile, that does it from the edition of Bloomberg Technology.
There is a lot to recap from today, so check out the podcast. So many of you are listening to the podcasts all over the world. This is Bloomberg Technology.